Afternoon, everybody, and thanks for joining us here today. It's a beautiful Friday afternoon in Melbourne, 23 degrees and lovely autumn afternoon. We have this afternoon now, Tim Harrison, MD of Ionic Rare Earths, to talk about the Makuutu Rare Earths project scoping study that was released yesterday. I think there's a lot of great things in here that Tim would love to talk about and reinforce. So I'll hand it over to Tim after this, and at the end of the discussion, we'll have time for a few questions and answers then. So thanks very much for joining us, and I'll hand it over to Tim.
Thanks, Peter. Look, thank you everyone for finding the time to listen in on some of the, I think, very strong attributes of the Makuutu Rare Earth project. And hopefully can help disseminate this information to the market. Just our disclaimers that cover the forward-looking statements, competent person statements, and the cautionary statements, which were all part of the scoping study documentation. Looking at the results of the scoping study, the company considers it to be an extremely robust base case. 11 years producing critical and heavy rare earths in an environment that's going to become increasingly rare. The economic parameters of that base case scenario are extremely robust, looking at producing post-tax free cash flows of $766 million US over an 11-year life. The EBITDA of best part of 1.3 billion, NPV, IRR, very robust numbers, based on an initial capital investment of $89 million, means that we can get the asset into operation, and then we're effectively funding the organic growth of the asset from one module, which we anticipate will be up and running in 2024, and then adding an additional module every second year, funded by free cash flows generated by the project. So it is a cash generating project. It will produce a lot of cash over the life that we've defined in the base case. And so we think it's an exceptionally good development opportunity for investors to get direct exposure for critical and heavy rare earths. The infrastructure is already there, as we've spoken about numerous times over the course of the last 18 months. Being an ionic adsorption clay, it's very different from the projects that investors have access to at the moment on the ASX. And because of that uniqueness, it's a very highly desirable project with a product that sees it with a very high basket price and a high margin. We've worked through a strategic partnering process. We recently announced the non-binding MOU we signed with Chinalco subsidiary China Rare Earth Jiangsu, which I think is a tremendous development for the company and for bringing Makuutu to operation. They have a tremendous amount of expertise. They have 4 downstream processing plants, and to the company at this point represents potentially a very good partner to help us deliver the Makuutu project. And you know, one of the things that remains there that's not included in the base case scenario is the fact that we have a 315 million tonne mineral resource estimate. There is approximately 230 odd million tonnes of inferred resource that unfortunately we weren't able to include in the scoping study. And based on the guidelines from the ASX, we were having to develop the scoping study on a basis that consisted predominantly of indicated resource. And so that's how we've ended up with the base case scenario of 11 years. But if we look at the potential exists to significantly increase the life of the project with additional drilling to increase the confidence in the inferred resources to indicated status. And so that will certainly be a focus of work in the near term. Looking at the resource, and hopefully all the investor base is very familiar with the nature of the resource at Makuutu. We've got the central zone, which hosts the indicated resource of 66 million tonnes. That has formed the basis for the base case scenario with additional higher grade inferred resource also supporting that base case scenario. So we end up with the base case, a production target of 84.5 million tonnes at 810 ppm. Now that has been drawn from a resource of 315 million tonnes. So we're roughly pulling in around about, between 25 and 30% of the resource. And so that resource hasn't gone anywhere. It remains in the ground and will be increased in confidence with additional infill drilling. We've also got the exploration ground out to the east. And as we put in the quarterly report this morning, we've completed that RAB program and we are now working through the packaging up of those samples. We anticipate getting those out of Uganda by the middle of May back to Australia for assay. And we should start to see some of those assays flow through and be reported in late June. Looking at the base case scenario, the indicated mineral resource area, which is the host of the material that's used in the production target for the base case scenario, is shown there in the image, along with the projected process facility, which is located about 4 kilometres northeast of the indicated resource area, close to the infrastructure corridor that has the 132 kV power transmission corridor. And so we've worked through a development or a strategy whereby we would develop the project on a modular basis. The first module being developed and then additional modules of processing capacity built effectively every 2 years. So we start off with a mining total material movement around 10 million tonnes per annum. We keep that flat for 6 years, and then we gradually ramp up the mining rate to be able to support feeding more additional processing or production target to the project. The strip ratio for the production target of 0.76 is also an attribute of the near surface mineralisation. So looking at the step change in capital spend, so the first module is funded by pre-production capital. All expansion of the project is funded by the free cash flow that is generated by the asset. So investors and the funding requirement up front for $89 million will be, to be determined on how we do that. Being such a low capital means that we have a lot of flexibility in the way in which we look at funding the project. And certainly will be a focus of activities over the next 18 months as we complete the bankable feasibility study and get an increased level of confidence on that capital requirement. The staged approach of developing the project also means that we limit the financial risk of investors, and that financial risk, that investment upside, is preserved for our investor base. So as we grow the asset based on the free cash flows, we'll obviously increase the free cash flows per annum that are generated by the project. And so by the time we are ramping up towards the 7.5, 10 million tonne per annum capacity, we are generating substantial and potentially generating substantial amounts of free cash flow. The other attribute of the staged development means that we are bringing the heavy and critical rare earths to market in an environment where the world is simply not going to have the heavy and critical rare earths it needs to be able to meet the commitments of the stimulus programs that have been initiated around the world to increase electric vehicles and renewable energies. So I think it provides a win-win opportunity for our shareholders. Looking at that production profile and the way in which we ramp up the rare earth production, effectively by year 7, which is 2030, we are nearly at full tilt on our rare earth production. So we're bringing that rare earths to market in a period where the rare earth pricing is forecast to explode. Looking at our basket, I mean, we've reiterated the attributes of the ionic adsorption clays, and I think that a lot of the market is understanding the clear distinction and differentiation of a product like this compared to a hard rock, a light rare earth dominant product. You know, Makuutu being an ionic adsorption clay means that we're deriving value from effectively, 13 of the 15 rare earth elements. 73% of our product being critical plus heavy rare earths means that we have got a very even high value basket. Looking at the heavy rare earth content of 44%, that stands out as being very unique amongst our peers on the ASX and even other registers and indexes around the world, as a very unique exposure to a vast suite of heavy rare earth elements that, again, presently are only supplied by the Ionic Adsorption Club in China and Myanmar. So as those deposits are diminished, it creates an environment where Makuutu becomes even more valuable in the long term as an enabler of downstream industry. Looking at that forecast on rare earth pricing, so the company has used forecast pricing from Argus and applied it to our basket. There's obviously three scenarios there that we're showing. We're showing a low, a base, and a high case, relative against where the spot price is today. And what we do see is from about 2027 onwards, we start to see the pricing really start to increase, and towards the end of this decade, it really starts to motor. It'll be very interesting to see the change in the forecast pricing as, the increased prevalence or adoption of wind turbines and especially offshore wind turbines is likely to see the demand for certainly dysprosium and terbium increase beyond probably what's been forecast to date. And given the extremely high potential substitution pricing for those two elements, really puts them in a strong position to capitalise, or for Ionic to capitalise on the fact that this material that we're producing at Makuutu, being very unique, is only going to increase in its value to downstream users in the future. We've got also a small element of our basket there being the heavy rare earths, holmium, erbium, and the like, which at the moment we've included the pricing on that based on today's spot price. But as that Chinese supply dries up with the China export control ban, we're likely to see the very high-end niche applications for these heavy rare earths, again, where substitution isn't an option, mean that we see dramatic increases in prices for those heavy rare earths. We've touched on just briefly there the projected demand for two of the major industries and thematics that are driving the potential rare earth demand, being electric vehicles and renewable energies. We've also got communication and defence applications, which are extremely reliant upon a select number of heavy rare earths. With that China export control ban now being implemented, the existing supply chains for those high value and very niche application heavy rare earths means that in applications where substitution simply isn't an option, the downstream user simply has to pay whatever the price is to find the rare earths. I think that presents Ionic with a market advantage, and it's something that's not really captured in our basket forecasts at this point in time. So when we look at the EV forecasts, effectively by 2030, the requirements for neodymium, praseodymium are expected to require a 7-fold increase in the NdPr production. And effectively you'd look at near similar numbers for dysprosium and terbium. when you also look at the requirement for dysprosium and terbium, I think it's also important to understand the niche applications where the high intensity permanent magnets are being deployed. And, the prime example there is wind turbines. Presently, there's about 36 gigawatts of world offshore wind capacity. And that's expected or forecast to increase by about 230 gigawatts over the remainder of this decade. We've even seen forecasts up to sort of 1,400 gigawatts of offshore capacity by 2050. Now, it's going to be very interesting to see how that is going to be achieved when the supply of dysprosium and terbium, for example, isn't as readily available as the NdPr that's commonly available from the light rare earth mineral concentrates. So again, it creates an environment where the DB and the dysprosium and terbium pricing is likely to, in my opinion, potentially exceed the forecasts on price increase. So, if we take a step back and we think about, this projected growth that's likely to be delivered with EV adoption around the world, and governments moving to a scenario where they outlaw or ban the internal combustion engine. EVs, wind turbines, renewables are going to drive a massive demand for rare earth consumption into the future. And, the quote that I've included on the slide there, I think is an important one. And I'll just point to a couple of lines there. It becomes quickly apparent that the rapid demand growth of the 2020s will soon be dwarfed by the astronomical demand of the 30s. And the term escape velocity, I think it is a very realistic potential scenario, in that this insatiable demand for the critical and heavy rare earths is such that it's implausible for the already lagging supply chain to catch up and keep up. So I think it's important for investors to keep that in mind when they're considering exposure to rare earth projects. And the uniqueness of Makuutu means that this is a project that is unlikely to be replicated elsewhere around the world. We know that we're one of a couple of similar sized ionic adsorption clays that are being developed at the moment. And so the strategic importance of our asset, I don't think can be challenged. Looking at our development plan and our work plan for the next 3 years, now that we've released the scoping study, we will be looking at doing more infill drilling. That infill drilling is really about bringing the resource base up. So increasing the confidence on the inferred resources to indicated, such that material can be incorporated into future studies that we'll complete on the project. Additional metallurgical test work, feeding into a resource update. We've initiated the bankable feasibility study. The plan is for that to be finished in the third quarter of 2022. So effectively, 549 days, that we're working to there on completing the BFS, the environmental and social impact assessment, landholder agreements to support a mining license application. So we're looking at putting that application in October of 2022, then working through an approvals process and into construction through 2023, with a view to starting operations and commissioning the plant in late 2023 into early 2024, with the plant ramping up and first production across that first half. So just to take a step back and say, have a look at the resource and where did we end up with the scoping study, I think it's important, again, to just continue to reiterate that the mineralisation hasn't gone anywhere. It's still in the ground at Makuutu. It's just that we have to base our scoping study results on predominantly indicated resource, under the guidelines set by the ASX. That's what we've done, and we're working to an aggressive schedule to bring Makuutu to operations. You know, the potential to delay the scoping study and do additional drilling, the company did not see as being, you know, of value in the long term and in our requirement to bring Makuutu to a mining license application in the fourth quarter of next year. So we're working to a schedule, and we're very happy with the results, knowing that with additional infill drilling, that indicated resource base will increase and will support growth of the asset into the future. Just touching upon the exploration upside at the project, we've obviously got EL00147, where we've completed the RAB drilling. And as I mentioned before, those samples will leave Uganda over the next 2 weeks, and we'll be presenting the results back to the market over the fourth quarter, over the end of the second quarter, so towards the end of June, I expect. We've also got 3 other areas C, E, and a zone in between the central zone and central east zone, which has the potential to be increased or converted to resources with additional drilling. So we know that there's near-term potential to add additional tonnes to the overall resource base at Makuutu, in addition to increasing the confidence of the asset. Just touching upon, you know, the investment highlights that we see at Makuutu, you know, the results I think are tremendously robust. 11-year base case scenario, producing a critical and heavy rare earth product that's unable to be found elsewhere, in potential demands that, you know, with the China export control ban being implemented, a product like this becomes even more strategic in that environment. We own 51% of the asset, and we move to 60% ownership on the completion of the BFS. We do have the option to increase our ownership, but we have the right over the option over the remaining 40% of the project. And so, you know, we see tremendous value in Makuutu going forward beyond where we are today. The strong and robust economic outputs from the study, I think, confirm that Makuutu is a very, very robust business case. It's a very compelling investment opportunity for investors who want direct exposure to critical and heavy rare earths. That pre-production capital of 89 million gets us into production, and then the growth of the assets funded by free cash flow. So with the infrastructure that's already there immediately available to the project, it's a highly desirable mineralisation producing a product you can't find elsewhere in a market and in an environment where the suite of rare earths that we produce at Makuutu becomes increasingly more valuable. And the strategic partnering process that we've got underway, we've signed the non-binding MOU with China Rare Earth Jiangsu, which I think is a tremendous opportunity for the project and the company to de-risk the development of the initial module at Makuutu. I think is a tremendous opportunity for Ionic to bring in that know-how. They've got 50 years of know-how processing and operating plants that process ionic adsorption clay mineralisation, 40 years of know-how in the heap leaching of ionic adsorption clay. So certainly presents us with an opportunity to get up the curve faster, to improve our ramp-up capacity, and potentially even optimise the capital and operating costs of the project. And at the end of the day, we've announced a production target of 84.5 million tonnes out of a 315 million tonne resource, with substantial potential to add a lot of life beyond the 11 years to the asset with additional drilling. So, and the exploration upside that remains, and, you know, hopefully we're in a position to report that to the market sooner rather than later. to give, I suppose, the market and ourselves a higher level of confidence on just how big Makuutu is likely to get. So thank you very much.
Thanks, Tim. And just looking at the share price, there's a little read for those on the call, and there's a big call today too, which is fantastic to see. You can still buy the stock at 4 cents, which hopefully will be the last time you'll be able to see it at 4 cents. But a pretty good wrap up. There's a lot of information there, and which you've simplified and I think explained quite well. A few questions have come through. I think you said you did cover this, but the scoping study numbers are based on the 100% project interest. That's correct?
That's right. So, I mean, given that the project, we own 51% at this point in time, but that's likely to increase in the future. So let's do it all on a 100% basis and work from there.
Yeah. Let's see. The cash, you've just recently had a pretty successful cash raising. It was heavily oversubscribed. And so you're pretty sorted for that for a while. How long do you think this the current cash position will cover your current responsibilities?
We anticipate that certainly the cash in the bank is more than enough for us to execute the work program that we see in front of us. Certainly the work required to move the BFS ahead.
There was a question earlier that why not use the 315 million tonnes in the scoping study, but you covered that as well. According to ASX rules, you're limited as to that figure, but that will allow you then to drill out and expand that security of that resource. Would your preference be to elongate the timeline of the mine or a larger production capacity?
Good question, Peter. Look, to reiterate the 315 million tonnes and why we didn't use it, I mean, what I would do is I'd probably point the investment community to the ASX guidelines, just to help them in the future understand what can be used and what can't be used in scoping studies. We've delivered, I think, a target that hits the mark. As far as ramping up capacity and ramping up or extending the life of the asset, it's a good choice to have, and you only have that choice when you have a big resource. And so, we'll debate that question internally over the course of the next 12 months on, ramping it up further or having a life of mine that extends out to 27 years or potentially longer. A lot of that's going to depend on who our strategic partners are, whether that be one partner or two. And how the company, decides is the best way to maximise the value of the asset for the company and our stakeholders.
Yeah, that's the answer. They're very good. The Ugandan situation, if we talk just a little bit about the stability of Uganda and your Ugandan partners there. I know you've mentioned this in the past, but for those that are new to the story, just to give a little bit of an overview of your view on that situation.
Yeah, so we have within Rwenzori Rare Metals, which is the 100% owner of the Makuutu Rare Earth project, of which Ionic owns 51%. We've got shareholders that are based Ugandan private companies who represent a lot of experience on the project and a good network within Uganda across political and the resources sector. So we're well represented within Uganda. We've had nothing but very strong support from our stakeholders in Uganda. We continue to be working closely with the DGSM and other groups within Uganda to help advance Makuutu along. We're very happy with the way in which things have been progressing in Uganda. And, we've received a tremendous amount of support to advance Makuutu to an aggressive schedule. So I think we're very happy with the nature of the current situation.
There's a few questions here which are a little bit, we'll answer some of them I think, independently, and some of them not quite clear, but one here from is concerning an interim PFS DFS produced prior to the BFS based on the high resource case once a greater component of the resource can be included in the economic case. Do you see that occurring?
Potentially. Yeah, potentially. I mean, everything's going to be around the timing and completion of work programs, and when we're at a point to be able to increase the level of confidence on the studies. If there is a natural point when those two things converge, then it would be logical to think that we would announce an updated study of some format. But realistically, and to be very direct, the focus is on around completing the BFS and the mining license application by October of 2022 to support advancing Makuutu to operations. So we are not actively looking at how we can increase the paper value of Makuutu. We're looking at how we actually bring Makuutu to operation.
A good question here regarding your agreements with Chinalco. Can you give us some color around other MOUs that you may have in conjunction with Chinalco, and how is that relationship developing, do you think?
Yeah, look, obviously we can't talk about any other discussions with other groups. The non-binding MOU with China Rare Earth Jiangsu, which is the subsidiary we're dealing with from Chinalco, we are working through an initial program to provide them with some samples, and we'll update the market accordingly. It's part of a work program that we're trying to map out now, which looks to bring in the expertise from China Rare Earth Jiangsu to help us de-risk Makuutu through the next phase of the project. So we will, when we're in a position to update the market, we'll do that.
There's a few here which we'll cover off offline, but one here is, hi Tim, the forecast OPEX. What would the deposit be amenable? Let me see how he's worded this. Would the deposit be amenable to other mining options such as in situ leaching or dredging?
Dredging, no. In situ recovery, potentially, but I think given our work program and our schedule, our base case remains heap leach technology. I mean, realistically, we are looking at alternative technologies, but I think that's a growth opportunity. Certainly not part of our base case. And when we're in a position to update the market accordingly, we'll do so. But I would say that right now, heap leach technology or the application of heap leach doesn't show any fatal flaws. We know it works. To me, it represents a low capital opportunity to advance the project, and so remains our base case.
And a final one here, which you've probably covered, but it probably brings it all together. Your base case stage development approach seems very conservative. If market pushes or dictates an expedited development profile, putting ASX constraints aside, could you bring forward going to 5 models in the first 3 to 4 years to get the 4,000 tonnes per annum REO 3 to 4 years earlier? I guess it's how elastic is your modelling there, and are you able to accelerate on the back of demand?
Look, I think we could have said we'll go from 0 to 12 million tonnes on year 1, but I think we need to temper that with a realistic approach. I think what we've put there is something that as a company we can deliver. If we find the right strategic partner who can help us expedite the growth of the project, then that opens up a whole new number of scenarios which extend beyond going to 5 modules. It really is going to depend on which and which strategic partners we end up working with, and what their requirement is for rare earths into the future, but also tempering that with what's in the best interests of Ionic and our stakeholders.
Okay, I think you've summed everything up there today, and I think one of the quotes that stood out to me in recent times was Warwick Grigor when he said that the mineralisation here in the clay is where nature has already done half the beneficiation for you, which puts you ahead a lot of the hard rock projects, and that's great. We're still trading here around the 4 cents after what looks like a pretty good scoping study. Just can you give us a bit of a summary or some leave behinds for shareholders or potential investors looking at the share price today and just having their finger wavering over the buy button?
Oh, look, I think it's important for the investment community to really understand the differences between the two different classes of rare earth mineralisation, whether that be the light rare earth dominant hard rock projects, which typically have the lower payability, and in order to value or to maximise the value from the asset, they can be extremely capital intensive, as opposed to the ionic adsorption clays, which have been operated for over 50 years within China, have been very strategic assets, highly valuable, and low operating or low capital development, and high margin assets. And I think, it's up to each investor to try and work out where they want the exposure. Do they want exposure to light rare earths, or do they want exposure to a more rounded product that you can get from an ionic adsorption clay? I think the attributes of the ionic adsorption clay are clear for those who are prepared to do the reading and try and understand it. And it's why they're classified the holy grail of rare earth projects.
All right, thanks very much today, Tim, for that summary and explanation of the scoping study that came out yesterday. I'm sure that we'll see some improvement over the coming weeks, months, and the rest of the year as you progress forward. I'd like to thank everybody else for tuning in here today on this Friday afternoon. It's been a pretty strong response here today. I've got some questions here which I'll take to Tim offline and come back to you in the course of the next few days. If you have any other questions, please don't hesitate to email them to me at peter@nwrcommunications.com.au. I'll see that Tim gets them. But thank you very much, Tim, and thanks everybody for joining today.
Thanks, Peter. Thanks to everybody to tune in.